Hello, I'm Greg Gilles, the editor of Unquote, and I'm here today at the IPEM conference in Cannes. And it is my pleasure to be joined by Gordon Bajnai, the chair of the Global Advisory Board at Campbell Lutyens. Gordon, thank you very much for joining us today.
Thanks for inviting me.
And we'll be talking about the fundraising market in Europe. We'll be talking about secondaries, and I'm sure much more as well. But at first, let's ask you, Gordon, where do you see the most appetite, the LP appetite for European funds at the moment?
There's an interesting global phenomenon that, given that the United States has become so much of a highly valued market, some say overvalued in the buyout segment, that recently we saw more and more US LPs starting more actively to look at Europe. Recently, I was in China and other parts of Asia, and I saw some selective, but some larger LPs looking at Europe, saying it's still relatively reasonably valued in the buyout segment as well. So that's an interesting phenomenon. That's one trend that is happening. On the other hand, there are quite a few uncertainties that LPs and GPs need to navigate. Brexit is probably the most obvious point. We are sitting here a little more than 60 days to go, and nobody knows what is going to happen. So that's a lot of headache to GPs who are trying to invest or raise money for the UK market, but also LPs. It is particularly severe in the infrastructure segment looking at the UK, but also many LPs looking at the PE segment are putting investments on hold at least for a while, despite the fact there were a couple of successful raises by certain UK managers. And also the more adventurous LPs and GPs may see an opportunity in asset prices going down because of the uncertainty and not because of fundamentals, hoping for a positive outcome.
And for managers that are based elsewhere in Europe, do you see any geographies in particular that are perhaps set to benefit from that slight uncertainty around the UK?
Certainly. I think French or France-oriented investors who invest in France, because it's the ultimate destination that matters, are doing better and better. And in general, I see some of the French players emerging and sort of matching their UK counterparts in the continent. Also, the German market, the DACH countries in a broader sense, it seems become a very hot, interesting place to invest, and the offer for really well-established managers who know their case on the ground, who have proven their case on the ground, is limited. So there is a demand for DACH country specific managers. That's a clear experience of recently.
Gordon, obviously we've talked about appetite on the primary side of things. If we turn to secondaries, I know GP-led processes have been a big area of focus for Campbell Lutyens in recent months, and obviously been a big theme in the market more generally. Do you see that trend continuing in the months to come, and what's your key take on that?
Yes, I see this as a key trend for the whole industry, not just secondaries, and I tell you why. We have intentionally became pioneers and thought leaders there, with leading the Nordic Capital transaction, the Mubadala transaction, the John Hancock Manulife infrastructure GP-led transaction, which are probably the three benchmark deals of the sector, because we believe that it has a broader meaning than narrow liquidity and secondary. It can change over time the way LPs look at the private asset class. To a degree, secondaries and within the GP-leds blur the line between what is private and public in terms of risks. Because if you can offer liquidity of otherwise closed and fixed-term funds, that means that LPs can also look at it more bravely. There is a way in and there is a way out. There's a much broader spectrum of how you can look at these investments. To be more precise, in case of infrastructure funds, many LPs now realize that the 10-year duration of an infrastructure fund is maybe too short. Also, there may be very good assets in those funds, which provide a very nice yield and probably further upgrade as time goes by. Why would they sell it if they still want to realize value, especially in a market where otherwise they often complain that infrastructure assets are very expensive. So why sell this one and try to buy something at a higher price? So continuation funds, 5 to 10 year extensions, can offer the opportunity to hold on to those assets much longer. Also, GP-leds offer the opportunity for those who want to leave, that they can leave. So it's quite a democratic process in that respect. And given the valuations recently, it's also attractive for those who want to sell. So that's one option in terms of the infrastructure side. Also, many of the funds have used it to adjust their strategy as the markets have changed and stay on with those investors who agree with that amended strategy or want to buy into that strategy, and for others to leave. Another interesting use of GP-leds, and here the Mubadala case or the John Hancock case in our recent practice, is that if somebody as an in-house team develops a fantastic track record and a superb seed of investments, portfolio of investments, they can offer that capability and those assets to third-party investors. So that happened in the case of both Mubadala, John Hancock, and I know that others are considering it. Those teams become independent or semi-independent and start to manage third-party money. For some of the biggest institutions, asset managers in the world, that's a very attractive additional route to start a new business line. So GP-leds are in many respects a very creative new phenomenon which are here to stay, and from the interest that we receive, I think they are going to grow significantly.
Good. Well, thank you very much for that, Gordon. Pleasure having you with us today, and thank you very much for watching.